Today, stablecoin investors pull more than $10 billion from Tether's platform. The ECB warns that crypto's volatility could impact the economy. And SEC Commissioner Hester Peirce shares her reaction to the collapse of Terra USD. Welcome to CNBC's Crypto World. On location at the DC Blockchain Summit, I'm Mackenzie Sagalos. Crypto prices are in the red today. Bitcoin continues to bounce around the $30,000 level. As of noon Eastern, it was worth around $29K. Ether, meanwhile, dropped to about $1,900, and Solana fell to $50. Okay, let's talk about the top stories. First, the House Ethics Committee just launched an investigation into the crypto dealings of North Carolina Republican Congressman Madison Cawthorn. Now, the committee is looking into Cawthorn's promotion of the Let's Go Brandon cryptocurrency, in which he might have had an undisclosed financial interest. So the investigation launched about a month after Senator Thom Tillis, also a Republican from North Carolina, said that Cawthorn owes North Carolina an explanation. Representative Cawthorn also lost his primary following a slew of negative headlines. Next, the European Central Bank thinks crypto volatility could destabilize the broader economy. In a research note released today, the ECB says as financial institutions become more involved with crypto, risky crypto assets could pose risks to financial stability. The ECB also says interest and demand for crypto assets continues to rise despite the risks, although crypto markets still represent less than 1% of the global financial system. Finally, withdrawals from Tether have surged amid the uncertainty in crypto markets and stablecoins specifically. According to CoinGecko, circulating supply of Tether dropped by more than $10 billion between May 11th and Monday, from $84 billion to $73 billion. About $1 billion was pulled from Tether's network last Friday alone. Now, lots of lawmakers and regulators have watched the fall of Terra and the volatility in stablecoins closely as they try to figure out how to regulate the industry. While here at the DC Blockchain Summit, I spoke to SEC Commissioner Hester Peirce about her reaction to Terra's collapse and where the agency stands on regulation. So the last few weeks, the crypto market has been in turmoil. Part of that had to do with the fall of one of the more popular stablecoins that's pegged to the price of the US dollar. Gary Gensler has said we should be using existing banking regulation and applying it to the crypto asset class. And you've seen that work. USDC, another popular stablecoin, again pegged to the US dollar, has a bank charter. It's backed by cash and T-bills. Is that what we should be doing, using existing frameworks and applying it to cryptocurrencies, or is there a need for fresh rules and a fresh framework specific to cryptocurrency?
Well, I think it depends what you're talking about. There's certainly some areas of crypto that can slot into existing regulations. There are others where you might need to use some of the authorities that we've been given to craft exemptions to make adjustments, and that's what I'd like to see us do.
So specific to the event that we saw in the last few weeks, Janet Yellen had a pretty balanced response to how we should deal with it. The head of the IMF said, stablecoins that aren't backed are a pyramid scheme, so essentially differentiating algorithmic stablecoins from those that do have reserves backing them. But lawmakers are dealing with people in their districts who have lost a lot of money. Some of them have. And so my question is, are we going to see an imminent or larger crackdown on crypto than we would have because of the events that have played out in the last month?
Well, I think it is important when we talk about these issues to distinguish among different types of cryptocurrencies, and even within stablecoins, as you mentioned, there's some that are different than others, and so that's an important piece of it. And we do have to take a balanced view, right? I think it is likely that we're going to have regulation happen faster because of the events of recent weeks, but stablecoin legislation was already on the docket, and so it's possible that will move forward more quickly. I think what we have to make sure to do, though, is preserve the ability of people to experiment with different models, and do so in a way that fits within regulatory guardrails.
And so Senator Lummis has a bill that she's proposed that includes a comprehensive framework for regulating cryptocurrencies. Obviously, the SEC plays a role in this, the CFTC. What are we looking at? As you said, it's nuanced. You have to apply rules to very specific use cases. There's already legislation at play. So where does the SEC fit into next steps when it comes to regulating the crypto industry?
Well, I think one, the SEC is already acting and using the authority that it has, but I do think it would be helpful if Congress came in and said, SEC, here's the role we think you should be playing, CFTC, here's the role for you. One could argue that the SEC would be a good regulator of retail exchanges if we decide to have a federal regulator. But again, that's really up to Congress to make that call. But there's a lot of work to be done even within our existing authorities, because traditional financial institutions want to get involved in crypto and they need guidance from us. They need regulatory clarity from us in order to do that.
So today you're speaking on a panel and addressing how you navigate that fine line that separates regulation from, fostering innovation in a space that is still in its early days. It's evolving, it's maturing. I mean, how do you take that approach?
Well, we talk a lot about responsible innovation, but I think we have to also talk about responsible regulation alongside that. And that means that as regulators, we have to be willing to engage with the innovators and figure out, here are our regulatory objectives that we're trying to achieve. How can we achieve those and still allow you to try out this new product or service and see whether the market likes it? But that means that it requires work on our part, and we have to be willing to do that work, and I haven't seen us willing to do that work so far. So I'm hopeful that the next phase is going to be us sitting down and thinking realistically about the potential for this technology, the challenges and the opportunities from a regulatory standpoint, but also from an innovation standpoint.
What keeps you up at night when you think about cryptocurrency and the way that it's going in the US?
Well, I mean, one thing does concern me is what concerns others, that there's a lot of fraud in this space because it's an area that it's the hot area of the moment. So the fraud concerns me. But another piece that does concern me is the way that we've sort of dropped the regulatory ball, and so we're not allowing innovation to develop and experimentation to happen in a healthy way. And there are long-term consequences of that failure. So that also keeps me up at night. On both fronts, we can we can go after fraud and we can play a more positive role on the innovation side, but we have to get to it. We've got to get working.
Last question. Do we need a U.S. central bank digital currency?
Some people think it's a good approach. Others would argue that there are private stablecoins out there that can play that role. And the advantage of private stablecoins is they allow for competition. There are arguments that a central bank digital currency could operate alongside. But again, right now we've got a lot of innovation in the private stablecoin side, and a lot of those are US dollar referencing stablecoins, so they could potentially be that alternative. It is important, whatever we do, that we protect people's privacy and their ability not to be censored in their use of that currency. So that's the difficult question.
Okay, with that, you are all caught up for today, but we'll have more from the conference tomorrow, so be sure to tune in. We'll see you then.